All right, welcome back. Week 5 of Becoming a Better Investor in 2024. Took last week, not week 5, episode 5. Took last week off, had some friends in town, so didn't quite have time to get to the episode. But if you're following along, thank you for coming back. I really appreciate you watching these episodes. Please go follow my page, like this video, and share with anyone else who might be interested in following along on this journey to become a better investor. So, at the end of last episode, we talked about the book that we started, One Up on Wall Street by Peter Lynch. It's an investment classic. Peter Lynch is one of the greatest, mutual fund managers of all time. I think the Magellan Fund returned like 30% annualized over his tenure, or something like that. Honestly, a very, very good stock picker and investment manager and pretty famed in those investing circles. So finished part 1. So today we'll be covering my key takeaways from part 1. And then also we have a lot of bonus content this week because I've been listening to a lot of podcasts and some great article reading. So stay tuned to the end of the episode to hear more about those. But let's dive into One Up on Wall Street. And so this is another book that's really catered towards the individual investor, the non-professional, the everyday average person looking to learn more about stock picking and investing in general. And so it's very easy to read, like you can be a stock market genius, but has some really great insights. But it is geared more towards that, average investor, which is great. And that's why we started here before getting into some more technical books from Ben Graham and, people like that. So keys to this book, it starts like you can be a stock market genius, talking about the market in general, what you should kind of look for, kind of the keys to the market in general from an average person's perspective. And so I came up with 3 big takeaways that are pretty basic, but I think really good to know and to share when thinking about investment opportunities. The first is that the average person has immense advantages compared to a professional investor. The saying being that a mutual fund manager never got fired for investing in IBM. This was written in the late 80s, early 90s. And so IBM was the big, the Apple, the Google, the premier companies. And so you're never going to get fired for investing in those big companies, even if your returns don't really outperform the market. And so you have the ability as an individual investor to take more risks, to find more opportunities in smaller stocks because you don't have an investment mandate outside of the fact that you're trying to make money and grow your portfolio. And so you have an advantage in that way. Also, you have the advantage of seeing what's happening in everyday life around you. So you see products, you see things that are becoming popular. And while just because that product may not be a great investment, but the opportunity to see it in real life and then be able to look and see if it's a great investment is an immense advantage than a professional investor who's probably not going to hear about some of these stocks. They may see it in their personal life, but not going to see about some of these stocks until, they have some momentum behind them or they have started getting a following from equity analysts and things like that. And so use everyday life. You see a new product, you see a new business, you interact with something. He uses a lot of 90s examples like Pep Boys and a few others, but it really could be anywhere. So any product, restaurant, things like that. If it's growing in popularity, it could potentially be a good investment. So that's takeaway number 1. Takeaway number 2 is don't try to time the stock market. This is probably, the best single piece of advice you can get. No one can predict the market. Economists can't predict the market. Stock pickers on TV can't predict the market. So you should not even try. And kind of the adages that he added to that is that you can buy the right stocks at the wrong price at the wrong time, and you'll suffer great losses. You can also buy the wrong stocks at the right time, and you'll suffer more of the same as far as losses. And so it's really about tuning the market out and finding the best individual investing opportunities, individual stocks, regardless of what the overarching market theory is. So that's big takeaway number 2. And then number 3 is more of a kind of a financial tip, I would say. It's don't invest money that you are going to need in the short term. So obviously that's somewhat intuitive, but if you're looking to invest money, it needs to be money that you're not going to have to use, because you can have a great investment thesis, pick the right stock, do everything right in that investment. But if you have to sell it early because you need that money, you may miss out on all of the returns of the investment. And so that's kind of a key, like more of a financial planning tip. He also recommends buying a house before you invest in stocks for a variety of different reasons. Could be good. It maybe not as applicable today with housing prices kind of the way they've gone, but we'll put that to the side. The real moral of that story is that don't invest in stocks if you're going to need that money, if you're going to be a forced seller at any point in time. So it really needs to be money that you can set out and allocate for 10, 20, 30 years in the future. And so part one, that is kind of the key takeaways. Looking into part two, it's going to be more technical on how to find these 10 baggers, as he call it, the big investments that'll, help you grow in your portfolio and everything like that. So very excited about that. Should have, some great updates next week. So moving on to what else I've been reading, listening to. One thing that I've really been listening to, really enjoyed, is the Acquired podcast. I've started it from the beginning. I've listened to a few episodes here and there before that, but went back to the beginning because I have my commute to work. And it's a really great podcast about companies that have been acquired, hence the name, and kind of the businesses and how they've been acquired and everything like that. And one episode in particular that I really enjoyed from listening to this week was, I think it's I've listened to like 8 episodes. I don't remember which one, but it's Bungie, the Microsoft acquisition of Bungie, which if you don't know what Bungie is, it's a gaming studio. They created Halo. They have the head of the Xbox unit at the time. He goes through the story of how they bought Halo and were building the Xbox. And it was just a really cool episode and one of my favorites so far. So definitely recommend going to check that out. It is linked in the comments. Additionally, a couple other podcasts. Started listening to BG2, which is Bill Gurley and Brad Gershner podcast. They've only done a couple episodes. I listened to the first episode. Very good, very timely. Thought it was really, solid. They have great perspectives. They're both pretty famous venture capitalists, and I think Brad Gershner does public investing too. So if you're really market focused, investing focused, it's a really interesting podcast to listen to. So I'll link that. And that led me to the article that I really enjoyed this week, which was a 2011 article from Bill Gurley called in his blog called Above the Crowd. If you haven't heard about it, it's he's been writing for years. And this particular article was All Revenue is Not Created Equal, the keys to the 10X Revenue Club. And it's about basically business valuation, how investors in the stock market values businesses and how earnings, quality of earnings, I would say, is and how that they are valued. And so it was really interesting, kind of pairing along with everything I've been doing here. So good read, also linked in the comments. And then the final one is Boz to the Future. It's the head of Reality Labs. I think it's Andrew Bosworth. And Boz to the Future is the podcast. The episode is The Future According to Matthew Ball. I've done some content on here about Matthew Ball. He wrote a book on the metaverse last year, re-releasing it this year. So they're talking about that and just talking about the metaverse in general and kind of really with the launch of the Apple Pro headset and comparing it to like Meta's offerings and just more about the metaverse and how now that the hype has kind of died down, where the actual innovation is happening and some cool stuff is happening in that space. So if you're interested in that, also in the comments. And that's an episode. So that is episode 5 of Becoming a Better Investor. I hope you had enjoyed it. Some really good content. We're going to keep moving along, keep reading these books, and also hopefully incorporating more articles and everything like that. So if you like it, like I said, please like this. Go follow my page on LinkedIn and hop in the comments. Let me know what you'd like to hear more of, less of. Just would love to hear your thoughts. And thanks for watching.